Hi guys, and welcome to Exams Made Easy. This video is the 2019 company final account, which was question 1 in the 2019 paper. It's worth 120 marks, which is 30% of the whole paper. I'm going to go through this question note by note, and then we'll look at the marking scheme and make sure we know how to get every single number in the marking scheme and get 120 out of 120. This was a fairly tricky question, the 2019 one. A few of the notes were slightly different than normal. What I would say, I will point these out and show you how to do them exactly, but you need to go through all of the final accounts questions in the papers, practice, 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 and make sure you can do the notes. So without further ado, we shall start the question. So as you can see, I have the question on the screen here. It's a company final account. Lincoln Limited has an authorised share capital of 1.2 million, divided into 700,000 ordinary shares at €1 each and 500,000 5% preference shares at €1 each. The following trial balance was extracted from its books. So a couple of things just to note as we go through the question. We are given land and buildings, and we're given accumulated depreciation. We are given delivery vans which cost 155. Trial balance figure is 120. Therefore, we have to work out the accumulated depreciation, which is 35,000, the difference between the two. We have discount, profit and loss balance. Other things we have 3% investments. Just note the date is the 1st of April. That could be relevant. Patents incorporating 5 months investment interest. Nearly every other question, if you look at the papers, is 3 months. So just be aware it's going to be 5. Other things we have the debenture, 7% debentures, which includes 60,000 issued on the 1st of the 4th as well. So that's going to be relevant as well. We have share capital, and that is the trial balance. Like every question 1, you are given the trial balance, then you are given a list of notes, and you have to go through these notes in order to, as you can see, prepare a trading profit and loss account worth 75 marks and a balance sheet worth 45 marks. So I'm going to go through each of the notes in order. At any time you can pause, rewind, fast forward the video, no problem. I would have the exam papers with you so that you can look at the question as I go through the notes. Okay, note number 1, first of all. Stock at cost on 31st of the 12th, 2018 was 75,400. This figure includes damaged stock, which cost 6,000, but which now has a net realisable value of 75% of cost. So basically, stock has lost 25% of its value. Stock has lost 25% of its value. So the 6,000 I am talking about here has lost value. Okay, so 25% of 6,000 is 1,500. So what we're going to do, we're going to take that away from the stock figure. So 75,400 minus 1,500 gives you 73,900. At the moment, that is our trading figure, and that is our current asset figure for closing stock. Now that may change as we go through the question. Generally in the depreciation note that would change, but at the moment that is our figure for closing stock. I'm just going to circle it here. 2 places it would go. Now working number 2. Working number 2, during the year, stock which had cost 7,000 was destroyed by fire. The insurance company agreed to pay compensation of €5,100. Okay, what we're dealing with, stock which cost 7,000 was destroyed by fire. We're going to take that away from purchases first of all. Purchases minus 7,000, which equals the purchases figure and the trial balance 104,500. 5,000 minus 7,000, which gives us 103,800. That would be our trading figure for purchases. That's the first thing we do. Okay. Secondly, we have 5,100 compensation due. That's going to be compensation due, and that is going to be a current asset in the balance sheet. Okay, current asset in the balance sheet. And we have a discrepancy between the 7,000 and the 5,100 is a loss. So we're going to call it loss on damaged stock. And the difference is 1,900, and that would be an admin expense in the P&L account. There's 1,900 admin expense in the P&L account. That's note 2. Note number 3. Note number 3 is a depreciation note. If you have experience of going through question 1s, you will see the depreciation note comes up almost every year. 2019 was slightly different. The rules of the depreciation changed slightly. But I'm going to go through it start to finish and point out a way to do it. We are always looking for 5 figures in this note. So we're looking for a new delivery vans figure, an accumulated depreciation figure, a profit and loss depreciation figure, a purchases figure, and a profit or loss on disposal. So I have 40 accounts set up. One is for delivery vans, one is for depreciation, one is for disposal, and one is for purchases. Let's just have a read of the note. The cost of delivery vans is to be written off on a straight line basis over 5 years. Okay, so basically 20% depreciation every year. A full year's depreciation, so this is where it's slightly different. A full year's depreciation has to be charged in the year of acquisition. So the year you buy the delivery van, full year's depreciation. None in the year of disposal. And delivery vans have a 5% scrap value of the original cost. So this is new as well. During the year, a delivery van which cost 25,000 in 2016 was traded in for 14,000 against a new delivery van costing 40,000. The cheque for the net amount of this transaction was incorrectly treated as a purchase of trading stock, but was entered correctly in the bank account. This was the only entry made in respect of the transaction. So it's slightly different to your normal depreciation account, but you're still looking for the same 5 figures. So first of all, you start with the opening balances of depreciation, delivery vans, and purchases accounts. So from the trial balance, you'll see the delivery vans cost is 155,000. The depreciation is the difference between cost and the trial balance figure, which is 35,000. And the purchases figure, I think we actually changed it here. Yeah, is 103,800. So 103,800. What I'm going to do, I'm going to score that out, the 103,800, just so that I know not to use that figure again. Okay, so we have our opening balances. So first of all, the delivery van cost 25,000 is being traded in. So we have a disposal of 25,000. Credit delivery vans, debit disposal 25,000. This next stage is where we generally do the depreciation of the van which was disposed of. Okay, and we put it in here. Disposal, and it goes here as well. So we're going to need to work out, it's slightly different, but it's once you know what to do, it's okay. So the first thing is, it says delivery vans have a 5% scrap value. So before we work out any depreciation, we must reduce by 5%. So the van being disposed is 25,000 less 5%, which gives us 23,750. That's the figure we're going to use for working out our depreciation. So the van was acquired in 2016, so a full year of depreciation, which 5 years, 20%. 2017, we have a full year's depreciation, 20%. In 2018, the van was disposed of, but we are told in the year of disposal there is no depreciation. So we have 2 full years of depreciation. So 20% of 23,750 is 4,750 and 4,750, which gives us 9,500. So 9,500 is our depreciation of the van which was disposed of. Debit depreciation, credit the disposal account. Next part, we are given traded in for 14,000 against a new delivery van costing 40,000. So we're given an allowance or a trade-in of 14,000, and this goes in delivery vans and disposal. I'm going to call it allowance, you could call it trade-in, 14,000. Finally, the check for the net amount of the transaction. So we were given a trade-in allowance of 14, so we actually had to pay the difference between 40 and 14, 26,000. 26,000 is how much we had to pay. So debit delivery vehicles, credit purchases, 26,000. That's all the figures we have from the notes, so we can start finding a few figures. So first of all, the purchases figure. I'm going to balance this account and find what the new purchases figure is. So when I balance this account, I get 101,2000. And bring that down, 101,2000. So that is our trading figure that is our new trading figure for purchases. Second thing I'm going to work out, did we make a profit or a loss on the disposal of the van? Okay, we have 25,000 on this side, we only have 23,500 on this side, so we have a loss of 1,500 euro. That is a S&D expense, a loss of 1,500. When you think about it logically, the van cost 25,000. Depreciate by 9,500 means it was worth 15,500, but we were only given an allowance of 14,000, so therefore a loss. Now, going to do the balance of the delivery vans, and I get a balance of 170,000, which is a fixed asset. So remember, we're looking for 5 numbers. We have 3 so far, 170,000. Now we just need to work out the profit and loss, depreciation, and the accumulated depreciation figures for delivery vans. So Delivery vans, we are told 170,000. Normally we'd be given months, but we're not. So 170,000. But before we work out depreciation, again, it's going to be 170,000 less 5%, which gives us, in this case, 161,500. 161,500, and we are looking for divided by 5 or written off over 5 years, so 20% of that. So 20% of 161,500 equals 32,300. That's our figure for the P&L. So that is an S and D expense in the P&L. Our accumulated figure, therefore, is when we balance the account is 57,800, which comes down on the credit side, which is accumulated depreciation in the balance sheet. So like I said, 5 figures, that's how it's done. Slightly different to your normal question ones, just because of the scrap value and the different depreciation, but that's how we do it. There's your 5 figures. Note 4. It was discovered that goods had been sent to a customer on 31st of the 12th on a sale or return basis. These goods had been entered in the books as a credit sale of 7,500, which is a markup on cost of 20,000. So selling price, which was 120%, was 7,500. We want to find out cost price, which is 7,500 divided by 120 multiplied by 100 to give us 100%, which works out at 6,250. Once we have those two figures, what we do is sales minus selling price, debtors minus selling price, and stock plus cost price. Okay, so sales we take from the trial balance 159,000 plus 7,500, which gives us 158,250. We have debtors from the trial balance 90,200 minus 7,500, which gives us 90,700. And we have stock, which 73,900 from note number 1. I'm just going to score that out. 73,900 plus 6,250, which gives me 80,150. So your sales figure is your trading figure, your debtors figure is your current asset figure, and your closing stock is your trading and your current asset figure. I'm going to put them in red. 3 figures there from that note. Okay. Note number 5, patents written off over a 5-year period commencing in 2018. And if we look at the trial balance, again, a bit sneaky because it usually tells us in the note, patents is incorporating 5 months investment income. So we have to deal with investment income as well. So we have patent figure 43,500 is our opening balance. So patents opening balance 43,500. Our investments, so investment income. If we look at investments, we have 360,000 invested at 3% for 9 months because it was on the 1st of the 4th. Let's work that out first of all. 3% of 360,000 multiplied by 9 over 12 gives us 8,100, which is our investment income for the year. But we are going to have to take away 5 months, which is incorporated in patents. So less 5 months. So when you do the calculation for 5 months, it's 4,500. Okay, 4,500 was paid. So where that goes is down here, 4,500. And what we are left with is what is due, which is 3,600. Investment income due, which is a current asset. So this figure here, the 8,100, we're going to use in the P&L. The 3,600, we're going to use as a current asset. I'll just highlight these as well in red. So those two figures there. Now down to patents. Patents is to be written off over 5 years. Okay, so patents is 48,000. Here, we're going to have a P&L written off figure. 48,000 divided by 5, which is 9,600. 9,600 will be patent written off. Okay, P&L expense. Patent written off. Then when you balance this account, you will work out what your patent figure is in the balance sheet, which is a balance of 38,400, which is an intangible asset in the balance sheet. So 4 figures. 8,100 is your investment income for the year, P&L. 3,600 is your investment income due, current asset. Patents written off, 9,600. Patent intangible asset, 38,400. Note 5, done. Note 6, suspense. Incorrect figure for debenture interest, although the correct figure had been entered in the bank account and discount received entered only in the creditor's account. So, debenture interest, we have discount received entered only in the creditor's account, so we must put it in the discount account. And we must look at the trial balance for the suspense, which here is salaries and general expenses. So the third account, salaries, and we'll call that suspense. We're going to fix that account. So put in your opening balances from the trial balance. Debenture interest, 6,400 debit. Discount, 15,500 credit. And salaries, 243,100 debit. So put those in. 6,400. Discount, 15,500. Salaries, 243,100. Okay, first thing I need to do though, I need to work out the debenture interest. Okay, so debenture interest, correct figure. So if I look at the trial balance, I see debenture interest, here it is down here, 7% debentures, including 60,000 issued on the 1st of the 4th, take me to 300,000. So for the first 3 months, I had 240,000 at 7% times 3 over 12, which gave me 4,200. After that, I had 300,000 times 7% times 9 over 12, which is 15,750. In total, 19,950. So we're going to deal with This one here, first of all, is your balance sheet creditor falling due within 1 year or current liability. That would be debenture interest due. And this one here would be your P&L figure for mortgage or debenture interest. The top figure, the 3 months of 4,200. You can see 4,200. Entered in the accounts though, 6,400. That is wrong. So in order to make that correct, we must credit 2,200 to the debenture interest. If we credit it here, we must debit it in the suspense, which is 2,200 debited to salaries. That's that dealt with. So now we don't actually need the debenture interest account. That's dealt with now. Discount received of 460 was entered only in the creditor's account. It wasn't entered in the discount account. This is discount allowed, this is discount received. 460 credit the discount, therefore we have to debit the salaries for 60. Okay, so our new discount figure when we balance these is 15,960, and our salaries figure is 245,760. I'm going to put these in red, highlight them. These are the figures we're going to use in our accounts. So discount received will be a P&L gain. Okay, so it'll be a P&L gain. Salaries and general expenses will be a admin expense in the P&L. Okay, so again we have 4 figures. We have a new discount figure, we have a salaries and general expenses figure, we have debenture interest due current liability, and we have debenture interest P&L figure. Working number 7 is a revaluation. So land and buildings revalued at 975. The land element is 150, so we must take that out before we work out depreciation. So land and buildings, depreciation, and a revaluation account. The opening balance of land and buildings is 850,000. The opening balance of depreciation from the trial balance is 55,000. Okay, if we look at the trial balance, you see we are actually told 55,000. Okay, so we must work out the land and buildings revalued at 975. So reval, it has to go up 125,000. Debit land and buildings, credit reval. Okay, now we must work out. So the company revalued the land and buildings on the 1st of January. Okay, so we must write off this 55,000 of accumulated depreciation, which is 55,000. Okay, so a revaluation reserve would be 180,000. That's in the finance by section of the balance sheet. Our new land and buildings figure is 975,000. That is a fixed asset in the balance sheet. Now, because the land and buildings was revalued on the 1st of January, we still have a P&L depreciation for the year, and that will be based on 975,000 minus the land part, which is 155,000, all at 2%. And this works out at 16,500. So 16,500 is our P&L figure, and when we balance it all out, 16,500, because it's been revalued, will actually be our new accumulated depreciation in the balance sheet as well. That will be an admin expense, and this will be balance sheet. Okay, just always be careful of the dates. If the date revalued at the beginning of the year, you have accumulated depreciation. If it's revalued at the end of the year, you would have no accumulated depreciation. So we have land and buildings, there's your new figure. Revaluation reserve, 180,000. Depreciation expense, 16,500. Accumulated depreciation, 16,500. Working number 8, bank. This is a bank reconciliation. Okay, so it's quite a long note, but there's a very easy way, first of all, to work out the bank figure. So we always go for the bank statement figure. A bank statement of 62,280 overdraft. And we go to note 3, a check for fees has not been presented for payment. So the balance as per statement is 62,280 overdraft. There is a check that hasn't gone through yet, so we're actually going to be worse off. We're going to add the check not presented, because that's going to increase our overdraft by 2,500, which would mean our overdraft is 64,780, which is a balance sheet current liability. So that's a simple way of working out your bank figure, first of all. Secondly, what we're going to do, we're going to look at note 1 and note 2, and we're going to reconcile it to make sure we get the same thing and do the other notes as well. So, a check received from a debtor for 5,600 has been dishonoured by the bank. This debtor has been declared bankrupt and had made a credit transfer for a first and final payment of 30 cents for every euro owed. Okay, so first of all, we need to put in a few opening balances for debtors, bank, and bad debts. So from our trial, but actually from back a few notes, we had a debtors figure. I'll just try and find it. There we go. From note number 4, our debtors figure was 90,700. So I'm just going to scroll that out. So 90,700 is our debtors figure. From the trial balance, our bank figure is a credit figure of 60,000. I'll put that back in black. Okay, so what has happened here? A check received from a debtor, 5,600, had been dishonoured by the bank. Okay, so first of all, our bank overdraft would go back up by another 5,600, and the debtors would be increased by 5,600. They owe us again 5,600 because the check has basically bounced. However, then they're declared bankrupt, and a credit transfer comes in of 30 cents in the euro. So basically, we get 30% of the money we are owed. So 30% of 5,600 into the bank, 1,680, 30% of the debt. 70% of the debt, so 70% of the debt, however, is going to be a bad debt written off. So that is 3,920 is a bad debt written off. Okay, so that is going to be our bad debt written off. We must also, when the money came into the bank, debtors would have been credited 1,680, and also the bad debt written off 3,920. So the debtors would have gone down by 5,600. So when we balance off the debtors, actually doesn't change. It's still going to be 90,700. It won't have changed because we've debited and credited the same amount. Okay. The bad debt written off, that's going to be a selling and distribution expense. Okay, so I'm going to highlight that in red. Okay, the bank, we won't touch the bank until we've dealt with note 2 here. A direct debit to a local refuse company for 860 has not been recorded in the company's books. So salaries and general expenses, opening balance is 245,760. 860 hasn't been recorded, so we're going to add 860 or debit 860, which gives us 246,620, and we're going to credit 860 to the bank account. So salaries and general expenses figure is that's going to be an admin expense in the P&L, admin expense. And when we balance this bank account now, you're going to end up with a balance on the credit side of 64,780. 64,780. And lo and behold, if we look up here, it's the same figure, so we know we have done things correctly. So 64,780 is our bank overdraft figure, 90,700 is our debtors figure, 3920 bad debts written off, and 246,620 salaries and general expenses. That's a common note in a company account. Last working, the directors recommend that provision be made for both investment income due and debenture interest due. So we've actually done that already in previous notes. So part 1 already done in previous notes. Part 2, provision be made for bad debts to be adjusted to 4% of debtors. 4% of debtors. So we find the debtors figure, 90,700. Sorry, 4% of 90,700, which is 3,628. That is your figure in the balance sheet you take away from debtors. Second thing we have to do though, look at the trial balance. Where is it? There should be a bad debt provision of 4,000 here. So there's a decrease in bad debt provision, so that's good. So trial balance figure is 4,000. Decrease of 372, which is a gain, P&L gain. Okay, so that's a good thing. P&L gain. Part 3 of this note, part 2 of this note, part 3 of this note. Part 3 is the managing director should be paid a bonus commission of 5% on all sales in excess of 1.2 million. We have sales of, actually we must go back to note number, there was a note I believe on sales here. Sales was 1582500. Okay, so 1582500 minus 1.2 million will give us and we need to work out, sorry, we need to work out 5% of that. So I'm just going to add in 5% of 5% of anything above 1.2 million. So that will give us 19125. Okay, 19125, which is selling and distribution expense. It is also balance sheet current liability. Okay, so two places that's going to go. And the last thing in this question, number 4, very straightforward. There's a credit transfer from the capital reserve. Transfer from profit. What we'll do here, we're going to take it from P&L, so 10,000. I'll show you where in a second. Take from P&L, and you're going to add that, add to finance by reserve section. And I'll show you that right now as we go through the profit and loss and the balance sheet. So that's all the notes done. We have all the numbers we need. Now we just need to put them where they need to go. So this is a case of practice to make sure you know the layout of your trading profit and loss and your balance sheet. So for 75 marks, we start off with the trading profit and loss. You have your sales figure, which we have worked out already. So first of all, actually for 1 mark, you have your heading, you have your sales figure, opening stock figure comes straight from the trial balance, purchases figure we worked out in the notes, and closing stock figure we also worked out in the notes. So make sure you use the very last purchases figure. So I'm just going to look back through the notes. The purchases figure, the last one we changed was it 101200? I don't think, yes it was 101. It was from the depreciation note. And the closing stock note came from, again, I'm just going to try and find, here we go. The closing stock figure from note 4, 80,150. Patent written off, we did a note for that. Salaries and general expenses, you can check back that note. Depreciation of buildings was a note, and loss and damaged stock. These are all admin expenses, and you must have that correct heading. Selling and distribution expenses, we have from the notes, depreciation of delivery vans, you can check back. Advertising, that came straight from the trial balance. Loss on sale of van came from a note. Bad debts, that came from a note, you can check again. Commission, we didn't do any note of commission. Oh no, we did. The very last note was our commission note, 19125 was commission. These are all selling and distribution expenses. Other operating income, we have discount received, that came from our suspense note, and a reduction in bad debts, that came from a note as well. We add the other income, we add investment income, and we take away debenture interest. These are from the notes. Now, dividends paid of 55,000, we are told in the trial balance. So that comes from the trial balance. The transfer to capital reserve is the last note we did. You take both of these away, gives you retained profit, and we had a profit and loss balance in the trial balance. You add that on because it's on the credit side. There is your final figure, which will go down to the balance sheet. Looking at the balance sheet for 45 marks, we have our patent figure. We had a note done for that. We have buildings, delivery vans, with both depreciations. These are back in the notes as well. That was the delivery van note and the building revaluation note. 3% investments straight from the trial balance. Okay, current assets we have, don't forget, debtors, which came from the notes, minus the new bad debt provision, and write it out exactly like this. Closing stock came from a note, investment interest due and compensation all came from notes. We add those up. Creditors came from a note, commission due in the notes, debenture interest due in the notes. That came from the trial balance, no note, straight from the trial balance. Bank overdraft, we did a bank reconciliation note. So you have your current assets minus your current liabilities, give you working capital, add it to this, so add to that, and you get your figure of 1469467. That's going to be your balancing figure. 7% debentures comes from trial balance. Our authorized and issued share capital. I'm just going to show you this here. So up the top of the question, so at the very top of the question, this is your authorized share capital. So 700,000 ordinary, 500,000 preference. That's authorized. Issued is down here, 500, 200. Okay, so that's where those figures come from. 1 mark each for, you must have all the numbers, add them up. So authorized, you don't do anything. Issued, you must add the revaluation reserve, which is a note, and the capital reserve. The capital reserve would be 2 seconds. The capital reserve comes from the trial balance. It's 55,000 down the bottom of the trial balance plus, so it's at the bottom of the trial balance, I'll just show you, is 45,000 here, but remember we added 10,000 on, so it's 55,000. 55,000. You add the profit and loss balance, and there is your balancing figure. If it balances, your 99.9% chance you're going to be correct. I hope this video helped. Again, rewind, pause, watch it again. All the best with the exams, and hopefully this helped. We'll see you again soon. Thanks a million. Goodbye.